Welcome to Markets Now. I'm Michelle Rook with Frayne, Olson, NDSU Extension Crop Specialist. Well, we're seeing mostly lower prices in grain and livestock this morning, except for cattle. Grains, another down day here, Frayne. And I guess let's talk just a little bit about the immediate pressure has been weather and better crop conditions, especially on corn. We saw an improvement in ratings yesterday. Is the market sensing that the crop is getting bigger, or yields getting bigger?
Yeah, and I think so. And so not only the crop condition ratings, but also when we look at the extended forecast, there really isn't anything major coming from a heat dome or looks like precipitation, at least within the majority of the corn belt, is going to be average or above average. So there really isn't anything in the short term weather forecast that's giving us any kind of pause or concern. Crop condition ratings are very good. It seems as though the crop is developing at pace or faster than pace. The other thing that's adding, in my opinion, some downward pressure is also the expectation for a pretty good safrinha corn crop, or the second crop corn coming out of Brazil. Just to remind everybody, second crop corn accounts for about 75% of the total corn production in Brazil. Some of that is exportable stocks, as well as the first crop corn, which is just finished harvesting. So it looks as though that the Brazilians are going to have a lot of corn to be able to push into the global marketplace. Uh, Add on top of that a very large corn crop. At least that's the expectation right now. And there's just, if I'm an international buyer or if I'm sitting at a local crushing plant, I'm saying, I'm not nervous at all. I'm going to sit back and wait to see where this thing goes and try and pick the bottoms.
Right. And all the grains lowered this morning. The funds are selling, especially in the corn market. As far as yield, do you think we're above a 181 trend line yield now in corn? Because that's kind of what we're seeing from some of the private estimates.
Yeah, and I do. Based on, again, the kind of my network and talking to farmers and looking at some of the reports, I do think we're going to look at a trend line or better yield. How far above trend line, I'm not sure yet. That we still have August, we still have some growing conditions. There's still a lot to go through. But again, this is the futures market in particular is all about expectations and what we see today and what we expect to happen in the near future. So the thought process right now is we'll have trend line or above. And again, when you put that into the supply demand conditions, we start building our ending stocks, which puts a lot of pressure on the pricing.
Right. The wheat market also seeing some pressure here because we're 53% harvested. So we're still seeing a
Yep.
little hedge pressure there.
Yeah, we are. And usually we see kind of the hedging pressure start to turn at about 2/3 harvested, so we're not quite there. So I expect for the next several days we're going to have some more downward pressure in the wheat markets, mainly because of that harvest pressure. By the time we get about 2/3 through, we tend to see historically kind of that bottom and a slow shift upwards. So we'll see if that historical pattern holds. But a lot of it is because the downward pressure in wheat is because of that. We did get some reduction in the spring wheat condition ratings on Monday. Again, it's not something that I think the trade is really concerned about at this point. But as we move through the rest of July now and August, as we start getting into combines and rolling into the spring wheat harvest, I think we'll be watching very closely on what the yields and yield expectations are there. So, depending upon the size of the spring wheat crop, that may have a little bit of a spark. We'll have to wait to see.
Yeah. The other thing that is weighing on the market, obviously, is trade uncertainty. We'll talk about that in a moment. My question prior to that, though, or previous to that, is how low do the prices have to get here? How much lower do you think we're going to go here? Because we're flirting with, sub $4 on old crop corn.
Yeah, and that's a really great question. I guess one of the things that I use as an indicator is export sales. Because the export market is one of those that again, exporters can sit back and look, and they can play the games between different countries. So if I start seeing some additional export sales, U.S. corn, for example, into the international markets, for me, that's signaling that the exporters feel that this is a good value proposition, that they're looking at, again, picking the bottoms, and that they're seeing that these are some real buying opportunities. So that's usually, in my mind, kind of that first indicator that we're setting a bottom or the prices will start to turn higher. Let's hope that this is the case. We have had a couple pretty good corn export sales into Mexico over the last 7 to 10 days. Again, which to me is signaling that we are competitive in the global market, that this is probably a value buy. Some of that is both old crop as well as some new crop purchases by the Mexicans. So those are the indicators I'm watching. And the simple answer is, as prices go lower, the selling starts to drop off and the buying starts to increase. And so the question is, at what point does the buying interest outweigh the selling interest? And right now, I think that will happen pretty soon. I'm a little bit concerned as we get to the end of July and into August, as farmers start cleaning out their bins, trying to get some of that old crop moved in. If we do have a very large new crop, corn crop coming in this year, we're going to have some bin space. There might be some additional pressure put on again late in July or into first part of August as farmers clean their bins out. So that's another one of those kind of price depressing areas that I'm a little bit concerned about.
No doubt. Okay, I mentioned trade uncertainty is also part of the pressure that we're seeing in the grains. I think 14 countries got letters yesterday saying tariffs were going to go into effect. 25% on Japan and South Korea. How much of a weight is that on the corn and wheat market here this morning?
Well, it's raising the anxiety level. I don't know that the corn market and the wheat market are responding directly to that announcement, but I know the anxiety level is starting to increase. Both Korea as well as Japan are big buyers of, again, both corn and wheat, both spring wheat as well as winter wheat. So it is something that the ag markets are watching closely. The thing we have to remind ourselves is that the tariffs that President Trump is talking about in his administration is products that the Chinese and the Koreans are selling to us. And so the big question for agriculture is, will there be some retaliation? And it's the retaliation portion of it that people get very anxious about. When the reports that I've been reading, especially out of Japan, agricultural products, in particular rice, is one of those portions of the trade negotiations that's getting a bit contentious. The Trump administration wants to allow more U.S. rice into Japan for the Japanese to lower some of their trade barriers. The Japanese are being very, very adamant that they're not going to allow that. And so usually when we think about these trade negotiations, it's the automobiles and some of the technology and intellectual property issues that are the real sticking points. But as we start getting really close to the end here, some of these ag products are now rearing their head as being some of the negotiating and sticky portions for these agreements. So again, that's why the anxiety is starting to rise. We haven't had any retaliation. There's still time to get some kind of an agreement in place, but the time is running out very quickly.
Right. So July 9th was supposed to be the original tariff deadline. The president has given those countries a little bit of wiggle room right now, hasn't he?
Correct. So July 9th is the date that, he said, we need to have something in writing by this time, or this is what's going to happen. And so that's why those letters were going out. Those notifications are going out to a large, broad base of countries. Now, the wiggle room part of it is the actual implementation. So when these tariffs are actually applied doesn't start until August 1. And so we do have a couple of weeks to try and get some kind of an agreement in place. At least, again, an agreement in principle. It doesn't have to be the full contract or the full trade agreement, but some kind of agreement in place before August 1. And then this 2-week period or 3-week period allows not only the U.S. from our customs department to be able to get ready and prepared for all of this, but it gives the negotiators a little bit more time to be able to come to some kind of an agreement.
Right. And the EU looks like we might actually get something before the July 9th deadline.
Yeah, and that was a little bit of well, I don't know if it's going to be in the next day or two.
Okay.
That's a pretty tight timeline, but I was really surprised that the current kind of reporting that's going on is that the United States and the European Union are very close to an agreement, that they're going to be very we should be getting an announcement very quickly. And to me, that was a little surprising because the European Union, because it's a consortium of 27 countries, usually takes quite a bit of time for them to make any substantial changes. And in particular, on the farm front, on the farm policy standpoint, they have a very intricate network of policies for their farm programs. So the fact that we're getting very close to an agreement with the European Union, I think, is very positive. I was expecting that to drag on much longer. So there is a bit of positive news coming out of this, and I'm hoping that we get something very soon.
But Frayne, unless you get China in some sort of framework or deal there, which I think the deadline is August 12th for them, does
Correct.
it, even if you put all these other deals together, does it mean as much as China?
Yes and no. That's a complicated. It depends. Okay, that's a complicated question. Obviously, from the ag standpoint, in particular from soybeans specifically, China is the market, and we're very concerned about that. The trade tensions and negotiations between the United States and China are still at a very high level. There's a lot of rhetoric going on between Beijing and Washington D.C. on what is being done, what should be done. It's very difficult, again, to get information kind of behind the scenes on where negotiations are right now. I know that they're talking. I know that there's a lot of pressure on both the U.S. and China to come up with some kind of an agreement. But those negotiations are very tense right now, and that is one of those large trading partners, not only for soybeans on the grain side, but also for beef and pork on the livestock side that are really important for U.S. agriculture. So that one and any kind of potential trade agreement with India. That's another country that people have been talking about. Now, the Indian agriculture and agricultural trade is very complex. Again, I think President Modi and his administration would like to get an agreement on trade for other products with the United States that would help his economy significantly. But about 40% of the Indian population are farmers. And so politically, President Modi has this fine line he's trying to walk and not make sure that he protects some of their domestic agriculture, that he doesn't open up Indian agriculture to too many imports. But yet he wants to open up the economy and be able to sell Indian products into the United States. So that one too is kind of tense negotiations right now. It looked as though we were going to get some kind of agreement fairly quickly, but then they started getting into some of these ag issues and things slowed down substantially. So in my mind, both China is going to be an important one as well as looking at India.
Yeah, and I know they said they have a mini deal, whatever that is, but so Canada.
Haven't seen a lot of specifics on that yet.
No, not really of any of these deals, to be honest. Canada and Mexico, no deal yet, but do we have to worry about it in agriculture? Are most of the ag products USMCA compliant and exempt?
Yeah, so I'm watching in particular the discussions with Mexico very closely, because Mexico is our largest buyer of corn. They're our largest buyer of wheat, the second largest buyer of soybeans. So in particular, trade with Mexico from a major commodity standpoint is really, really important. Now, we do have the USMCA, which is that trilateral three-country agreement. And I'm not a trade attorney, but my understanding is that because of that agreement, that the flexibility that the Trump administration has to put on additional tariffs or to put some kind of reciprocal or punitive kind of tariffs in place is limited. And that any kind of changes that are made, for example, bilateral with U.S. versus Mexico or U.S. versus Canada, that there also needs to be an adjustment to the agreement. And so all three countries need to come to consensus on what those changes are going to look like if it's existing or currently covered by the USMCA. And most of our ag trade, most of our ag products are covered by that. So again, those negotiations are going to be a little more complex because of the existing agreement in place.
All right. Well, lots to talk about on trade, that's for sure right now, and the impact it's having on grains. Thanks for joining us, Frayne Olson, who is NDSU Extension Crop Specialist. That is Markets Now.